Accounting equation and Excel. Rental income, customer deposit. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation, using Excel. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever. Because our merchandise is better than their stupid stuff anyways. Like our Accounting Rocks product line. If you're not crunching chords using Excel, you're doing it wrong. A must-have product. Because the fact, as everyone knows, of accounting being one of the highest forms of artistic expression means accountants have a requirement, the obligation, a duty to share the tools necessary to properly channel the creative muse. And the muse, she rarely speaks more clearly than through the beautiful symmetry of spreadsheets. So get the shirt, because the creative muse, she could use a new pair of shoes. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. We are in Excel. If you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you may want to begin back there or just construct your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 4 tabs down below: example, month 1, practice, month 2, example, in essence, the answer key. Month 1, prior month of operations, practice tab having pre-formatted cells so you can practice the practice problem with less Excel formatting. Month 2 tab, the tab that we will be working in, current month of operations, where we started with first having a blank worksheet but are basically working within a template at this point in time. However, we will be adding to this template as needed as we go, practicing our Excel tools and formatting as we do so. Let's go to the example tab to get an idea of what we will be doing. Remembering we're using the accounting system, the accounting equation, basically as our trial balance from which we will construct our major financial statement reports: balance sheet, income statement, statement of equity. Remembering the income statement can also be called that profit and loss report. So we're now going to be looking at a rental system, imagining in our case as a guitar shop. We've got our guitar shop, but now we're going to add the rental of guitar equipment. So the idea here being, we want to touch on some different kinds of revenue generation that might happen within a company, and also that you could see in different industries. So we've looked at then general service items that might be similar to like a car repair shop, right? So they come in for repairs, we're repairing the guitar. We've looked at the sale of inventory, where you have to deal with the tracking situation for that inventory. Then we looked at a scenario similar to a job cost system, not really in a construction company that has long-term jobs, that's a specialty area in and of itself, but with something like a partnership typically designed after like a law firm or a CPA firm, where you're going to be billing out for the time that was worked, invoicing out, you might call it, using the staff, tracking that information, the time that they worked to send out the bills. Now we want to think of a situation that's similar to what you might see in a rental company. If you rent like real estate or any other type of rental, if you look at a real estate situation, then sometimes you're going to have the prepayment for the last month rent, or possibly a security deposit, which is another area where you have, in essence, that unearned revenue situation. You're getting paid before you actually do the work. In our case, we're going to imagine that we have equipment. This is another scenario that you might see. We've got the equipment and we're going to basically rent out the equipment. So instead of selling the guitars, we're going to put together a package, possibly guitars, amplifiers, microphones that we can rent out for a weekend or something like that if people want to rock out or have a band situation for a rental period of time. That's going to be our general idea. Now, if you were to do this like in a QuickBooks type of system, then you might come up with a whole like process on how you would make this work. In other words, if someone's going to call in and say, I want to rent certain equipment at a future point in time, we have to make sure that we have the equipment available and so on and so forth for them to come in and rent it. Therefore, when they call in, we might say, all right, what we would like for you to do is we'll give you an estimate. So we might actually make an estimate form, remembering that the estimate form doesn't actually record anything, but in a QuickBooks system, we can track the estimates in what you might call a subledger, even though it's not a subledger because it doesn't support any particular account, but we can look at it in a report or in the activity of a particular customer and see if it has been closed or not. And then basically, we also might use that estimate to create a deposit, meaning, hey, look, I'm going to reserve that equipment for you. We're going to wait for you to come in here, but I don't want to sell it or rent it to somebody else. If you want us to reserve it, you have to lock it down with a deposit, meaning we're going to get a payment before we actually do the work, which is renting the equipment. So we have the situation where we shouldn't really record that deposit, similar to a rental situation of last month rent or security deposit. Can't put it in as income. Rather, we put it in as a liability, or in our case, a negative receivable, because as we talked about before in undeposited revenue, that might be an easier system for us. We'll discuss that shortly here, but we talked about that more in a prior presentation. And then when they come in to rent the property, that's when we earn the revenue and possibly receive the rest of the payment. And notice you might still have a security deposit there until, that would be on the payment of the rental to make sure that they return it, right? But we'll say we receive the payment at that point in time, and that'll be the last bit. So that's going to be what we're imagining to do here. Now, also note that if you were to do this in practice, then you might come up with items of rental equipment that are going to be used to create the estimate and the invoice. In other words, I'm going to say, hey, look, it's standard that people want to rent like maybe 2 guitars, a drum set, an amplifier, and 2 microphones or something like that. And I'll put that as my base band rental equipment. And you might have some variant of things within there that you can pick from our shop, but that's going to be the baseline so that I can bill based on that. And then I could also say, hey, look, I'm not going to do rental of a singular guitar possibly, because there has to be a minimum rental amount in order for the rental to make it worth our time to do it. So we might say you have to pay for at least a minimum band set, and then maybe we'll rent more than that. If you need 2 guitars or something like that, we can add on to the rental after that point in time. I only point this out not from a journal entry standpoint, but from a logistical standpoint, meaning you need to know the items that you're going to be putting together from a marketing standpoint, from a logistics standpoint, and then put those items into the system so that someone calls in, you can say, here are the rules for the rental property, and have your list of items similarly to what you might have for like the guitar lessons laid out or something like that. All right. But from a journal entry standpoint, we're going to go over to the month number 2, and we're going to say this is on 2/27. And we're just going to say that we got an advanced customer payment for the rent of equipment. I'll just say equip. And so someone calls in, and customer number 5, we're going to say, calls in, the customer family's back. And customer number 5 calls in and say, hey, look, we want to rock out on the weekend and we need like a band set. And we're like, okay, we have a minimum band set that we could put together, and it includes like 2 guitars, a drum set, an amplifier, and 2 microphones or something. And he's like, okay, that's cool, but I also need like another guitar and like 2 more, like another amplifier, because I want to piss off my neighbors. And we're like, okay, then we can add that in. So we might use that to create then an estimate form, which doesn't actually have a financial transaction related to it, but we can use that estimate form to then say, I want 10% of that, or whatever we think, as a deposit, so we can make sure that we hold on to this equipment, because we got a lot of people, Mr. Customer 5. we got a lot of people that want our equipment. We're really popular. So if you want us to hold on to that for you, we'll do you a favor and hold on to it for you, but you have to commit by giving us a $200 deposit based on the full invoice that it's going to cost you when you come in to actually get the equipment. So then they're actually going to pay us the $200. So we can imagine two things happening here. We make an estimate form in order to calculate the deposit. And then when they pay us that, we're going to make, I would call, a payment form. So in QuickBooks terminology, we'd call that a payment form, right? That we'd get the actual money. How do we record the money? You could record it with a deposit, but no, we're gonna get the deposit from the customer. So if it's a payment form from like QuickBooks, that's the form that decreases the accounts receivable. But hey, there's no invoice to tie it to. How could I put a payment form in if there's no accounts receivable? Well, it's going to create a negative receivable for that particular customer, which you might call a credit balance for that customer, which is actually incorrect from a reporting standpoint because it should be a positive liability, a customer deposit or unearned revenue. However, as we talked about before, if I put it into unearned revenue, that results in two basically subledger accounts, which makes it a little bit more difficult. So if you want to go into that, if you're going to argue with that, people have problems with this. So, and I understand it too. I mean, I get it, because from a book standpoint, you would say, no, that goes into unearned revenue. I get that. So we discussed that whole thing under the unearned revenue. But from a bookkeeping perspective, generally, it's easier on the bookkeeper to make a negative receivable and record it with a payment form and then not apply it to an invoice so that you have a negative receivable for that customer, because you could see it in the subledger reports for the customer. So that's what we're going to do here. We're going to imagine we have a negative receivable. Again, if that bothers you, look at my arguments in the other presentations on unearned revenue and see if that convinced you. Maybe you still be unconvinced, but at least hear me out on it. So where am I going here? The other side is not going to revenue yet. It's going into, we're going to say, undeposited funds. So, and the reason we're putting it into undeposited funds is because we might have an intermediary like a PayPal, or we might actually get the cash and it doesn't go in the checking account yet, but we have a policy of it going through undeposited funds so we can group them together, putting it into the checking account in one lump sum. Let's put zeros across the board and then deal with our subledger. Zeros across the board, zeros across the board. And then in the subledger, we've got customer number 5, the customer family. Oh, wait a sec. This should be, I didn't properly number them up here. This should be customer number 4. No, customer number 3, customer number 4. And then I'm going to add a new one, customer number 5. So another member of the customer family. I'm going to select the whole column, right click and insert. And we're going to call that customer number 5. We'll call it customer number 5. Wants to rent the guitar. So we're like, okay, your whole family's rocking out over there. They've been buying a lot of guitars lately and doing guitar lessons, so that's cool. We love the customer family. So we're going to say this is going to go in here, but it's going to be a negative. So I'm going to say this is going to be equal to the negative 200. So now this customer, notice the total balance. If I pull this over and then copy down the running balance, our total accounts receivable will still be positive, which looks normal. But it's actually understated because when I look at the subledger, we have a negative amount for customer number 5, which doesn't make any sense for a receivable account because it has to be positive. It can't be negative, because if it was a negative, it wouldn't be an asset, it would be a liability. You know? What is this doing here? You'll drive an auditor crazy. Like, this is wrong. They're going to have a fit, you know? But then you're like, dude, it makes it easier from the bookkeeping standpoint, and we're going to do an adjusting entry at the end of the period, because now this payment form is going to be able to tie out nicely. Like when customer 5 comes in and says that they want the rental equipment, I can see the prepayment nice and easily within my subledger that deals with customers, which is tied to the accounts receivable account, not a liability account, which makes it harder to see unless you have some software that's kind of doing some kind of workaround in order to put those things together in a logical way, which even if that's the case, still makes it a little bit more complex than just having a negative receivable, which is nice and easy typically, okay? That's the general argument. But people will get upset with it. I get it. But then I'm going to put an underline under this. Let's put an underline here. Home tab, font group, underline. And then we'll pull down the balance. Pulling down the balance. Selecting these items. Pulling that down. Ba-boom. And nothing has happened yet thus far because one asset account went up, undeposited funds, and one went down, accounts receivable. Let's bring down the balance. Bringing down the balance. This is going to be equal to the sum of the prior balance and current activities. I'm going to then say Control C for copy. All right, I'm going to do this again. I'm going to hold down Shift. I'm going to hit the right arrow, but then I'm going to stop right at the end, right where I need to stop. Here we go. Oh my goodness, that was close. Beat that. That was pretty close. Next time I've got this. I'm going to right click and then I'm going to paste it, but just the formulas only. Paste just the formulas only. All right. So that is that. Let's copy down the balance. Copy down the balance. We'll put all, what are you talking about? What you talking about, XO? Let's copy down the balance. And then I'm going to put an underline under this one. All right. Now we're going to say on 227 that we're going to just deposit from the clearing account. So I've got this 200 in the clearing. I'm going to imagine now I make the deposit out of the clearing. That's all I have in there. In practice, I might have other stuff going through there, meaning it might be grouped together with a credit card company or PayPal or Stripe that I have to combine together. But even if I don't, I might still have a general policy of doing that because sometimes I do have that intermediary problem, and therefore I want one system always going through undeposited funds to not confuse things, and or because I like the fact that I want all of my cash deposits to be with deposit forms, not with payment forms going into it. Otherwise, it gets confusing when I try to sort my data in something like a QuickBooks because I'd like to sort by form and have all the increases be just deposits. That would be easier. So I'm going to say this is going to be negative of that 200, and this will be a positive 200. So now we're just moving it from the undeposited funds into the checking account. Let's put zeros across the board. Nothing yet happening to the income statement because we haven't yet earned the revenue. When do we earn the revenue? We earn it when we rent the rental property. So we'll put zeros across the board. I'm going to put an underline here. We'll select the whole thing and put an underline underneath. I'll fix the underline thing over here shortly because I got these funny things over here and that's terrible for formatting's sake. All right, so then I'm going to so then let's bring down the balance. Bring down the balance. This equals the SUM of the prior balance and current activity. We will copy that. Right arrow. Then I'm going to hold down Shift. I'm going to stop right at the end. Here we go. Oh, short. Oh, but I was only one off right there. That was even closer than last time. I'm getting good at this. This should be a Vegas game or something. I'm going to let's pull this down, pull down the totals. We're going to copy this down. We'll put an underline here. Again, nothing happened to the accounting equation because one asset went up. This time the checking account went out of the other asset. Undeposited funds, nothing needs to happen to the subledgers because nothing happened to the accounts receivable in this case. Next time we'll talk about the situation where they actually come in and we rent the guitars, in which case we will make an invoice typically to bill them for the rest. So we'll convert what we imagined we made here, which is the estimate form. They come in, and when they come in, we're going to be like, oh yeah, we'll look them up. We'll look up customer. Oh, the customer family. We love you guys. And they're like, rental property. There's the $200 deposit that you made on it. And I can look up the related estimate form that would be in the customer area, but it's not in here, but it would be in the accounting system of a QuickBooks, because we have that 3-dimensional system instead of the 2-dimensional system here in Excel. And it would say, there's the total bill. Is that cool? Is that what you guys want? And they're like, yeah. So then we would use the estimate to create the invoice, which would create the invoice, and at the bottom of the invoice, it's going to show that $200 that has already been paid, showing them the net amount. And again, we'll get into that next time. It'll be great. It'll be great. So be watching for that one.